All right, ladies and gentlemen, I hope you had a wonderful day. The 8 days in a row of the S&P going up has finally came to an end, and in dramatic fashion by none other than Jerome Powell. So before we get into any of that, I need to go close the effing door. And here, this is what I'm talking about.
We expect growth to moderate in coming quarters. Of course.
Jerome Powell, by refusing to treat climate change like a systemic risk,
Thank you.
You are putting us at
Thank you very much.
economic disaster.
Thank you very much.
Climate change will threaten
Thank you. Just close the fucking door. Close the door.
Yes, this is Jerome Powell today, and we are going to talk about his statements, but what I just showed you, man, I don't know if you guys realize how scary that must have been for Powell. So please stop messing with Powell. That's a message to everybody, and I'm the one who makes all of the crazy thumbnails. You know what I'm saying? But, look at this.
Like
these people walking behind him were the protesters. That guy, protester, I'm pretty sure. Protester. Look at this guy's giggly as hell. You see that? So,
thank you.
Bro, I totally understand his reaction. That must have been absolutely terrifying. But if that wasn't terrifying enough, I'm telling you, the market reaction today, it was a double whammy of bad news. Every day this week, we were worried about these events, even Powell speaking the day before. Well, this time, the bond auction was not good, and then Jerome Powell, he reiterated what he said before, but it was a reminder of the hawkishness, and then you ended the rally. The bond yields came back up again. They gave back all of their gains for the week. So this is what was kind of fascinating, because you're still above when Powell spoke at the FOMC, and the longer term bonds, even the 10-year, they're just doing right where you closed after the non-farm payrolls, which was pretty much a little bit higher than where you opened that day. So we've given back a little bit of the progress. Certain things are elevated. We talked about, it's okay. It's natural if there was a red day, but how today played out, it was very dramatic. And now the whole debate on, is this a bear market rally or not? A move like today, well, it puts everything right back on the table. Thankfully, tomorrow is Friday. You have one more trading day left, and then before you know it, it's CPI and all the big data next week. So, Chad, we got a lot to talk about. I'm going to talk a little bit about the range-boundness. I have a couple of plays. I closed a couple of plays today, even made a couple of flips, and then what we're looking at for tomorrow, and then the rest of the week. I meant to say for the next week, but run it, baby.
Walking to the couch, it's the joints on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, all we got to do is talk about today. So tomorrow, 7 a.m. Pacific, 10 a.m. Eastern, about 30 minutes after the bell, you will be getting the Michigan consumer sentiment. There's an element that relates to inflation expectations that will have the ability to move the bonds in the market. Now, is it going to be the set-all, be-all? No, that is next week. But now, data tomorrow and how it plays out and how the market wants to take it, especially the bond market, because what people are talking about now is a yield overhang. Remember, if yields are recovering and stabilizing, it's a lot easier to brush off everything else. But again, if those yields start climbing back up again and you start giving back more of this rally, then people are going to get a little bit more concerned, because the yields are a very, very gloomy cloud, especially if they make that climb back up again. So we'll see how tomorrow plays out, if any of the data moves anything, but that's all it's going to be. And wrapping up the weekend Friday after this epic last 7, 8, 9 days, this last 2 weeks really, and then like we said, it's all about the data next week. So as far as what happened today, it was absolutely wild. So why? Because we had a gap up. You were doing great. And it was interesting because there was a lot of bad news. China, Japan. It's not like things were as good as they have been. Like the other days, we've had way better news pre-market, and we didn't really gap up, but we gapped up. We went up right off the bat. You sold off. You did get to hit a new high. That's the interesting part because you did this exact same move yesterday. So literally by the opening candle, you're hitting 2 points higher than the high you set yesterday, which was like another 10 points higher than the one before that. And then we sold off, bounced right back up. And again, you're right under the 4,400, which is a very important level, especially if you want to see an uptrend. And then sure enough, we started dumping. But now what happened? It was exactly like we talked about with the schedule. Right at 1 p.m. Eastern, the bond auction came out, and this was a massive move. Like I told you, this was the biggest daily move for bond yields on the 30-year since March of 2020. That's literally when we hit TOT. You know, this time it went in the reverse way, but the crazy part is we were talking about this all day this morning. I gave you an update yesterday and said a lot of people are giving outsized attention to this. And after today's reaction, do I believe that? Yes, I do. I said this all throughout the day before it. People were even asking me about certain plays to make, and I just said, listen, it's very simple. These 30-year bond auctions have always been bad. There's not really demand even this quarter, this month, this year, everything. All of the 30-year bond auctions have been pretty subpar. Now, it's not to say today was good. Today was actually really bad, but we have seen worse as of recently. Certain aspects were the worst as going as far back as 2016. Points at 2016, and there's definitely reasons to look at, but here's one thing people keep ignoring. This 30-year bond auction, although the reaction, it came in 10 basis points, almost 12 basis points lower than the last 30-year bond auction, which was still pretty trash, but this was all the logic we kept talking about. I think everybody has hyped this bond auction so much with all the refunding and Powell and everything else going on that everybody was so hyper-focused. It caused a bigger move than Powell. Again, when Powell started speaking, this was the market. It reacted a little bit to his pre-written statements, but it was pretty much right where everything hit a low within a couple minutes of the bond auction. So you did end up going down, but the distance from here to here is the same distance from Powell to the end of the day. So although Powell came out, and what did Powell say? Why did we react like this? He said what he said last time. Remember, all of those Fed speakers were like, I don't know if the market heard what Powell said. I was telling you, it seemed like the market was trying to bully Powell on Fed Day. Well, Powell just came out swinging with the exact same thing. He said, quote, if it becomes appropriate to tighten policy further, we will not hesitate to do so. That's literally how he opened it up and said, we will continue to move carefully, however, allowing us to address both the risk of being misled by a few good months of data and the risk of over-tightening. And he said, once again, we are not confident that we've achieved any stance. He played the game about ignoring long-term rates and said, hey, it's one factor that is tightened up and sure that could help, but he's not giving you any clear, but at the same time, everybody is still implying that he is done, but he did come out swinging with all of the hawkish things he could have said, and it kind of gave the market a reality check a little bit, but I think you were already just taking in all of the damage from exhaustion of 9 days, the bond auction, which shouldn't have caused this big of a reaction, but at the same time been a lot of attention, and then everything else. But it's not like even during the protesters interrupting, it's not like the market dumped even, and it just got very wild throughout. But I don't think Powell added much. It was just now the first day this week, or maybe in 2 weeks now, that you've actually watched, hey, this could be an event, and then things didn't really go as best as possible or give you a reason to bring up the word Goldilocks. So that's what we had today. Now tomorrow, like I've been saying, the whole thing I've been bringing up, it has to do with this range, and maybe we undershoot it or overshoot it tomorrow. I mean, I don't think we have to stay in it exactly, and especially with how fast things move, but we did this for a couple of days at this range. We need to figure this out. When I was talking about it, I don't think we should be going lower than 4,333. Now, is it possible to overshoot that and sell off a little bit? Definitely. That's pretty much what we did at 4,200. Remember, we were talking about 4,200 being a big pivot level. Well, it overshot it to the downside, another 100 points. Then right when you got above it, you went up another 100 points. And now maybe that's what you want to say this is as well too. And that's why I'm saying just watch here and how that kind of trades, because I'm pretty much thinking we should hold within this range now leading into the CPI, and then the CPI should speak for Powell. Like I'm showing you today, and I hope you guys see it, the data instantly. One set of data, 3 days going up. Woo, we had a great week. Boom, one day. Just one set of data. The whole point is Powell doesn't have to do much. Powell doesn't have to say much if he could get the market condition to keep reacting like this. And that's why I say him punt Janikowski up until the data next week. But now let us get into the plays. So right off the bat, I got a couple of different plays I want to go over. I did close out of a play. I made a couple of day trades, and the first one, it has to do with what we talked about with the bond auctions. I don't know if we're going to get a data set like that tomorrow. So we talked about the MES. I did make a flip on it. I shorted it literally right when the auction came out bad. Bond yields plummeted. I took 3 MESs short, covered it in like 3 minutes. I made like $200 off it real quick. It shot back up, did another short, covered it here, then it bounced up, and then I got another long here. And then I try to average down with Powell there, but I ended up losing $80. I was like, I'm over this. I'm over this on the bounce, because I did think Powell was going to kind of come in saying nothing, but the whole conference and what he said did have a lot of hawkish undertones. So made those plays. Tomorrow, maybe we'll get a data event, but really, if you want an event like this, these candles were beautiful. I'm telling you, how fast you even made money with small futures. These were the real volatile data moves that we haven't seen in a while. Again, even when you pull out the charts, what happened with that bond auction, it was statistically significant in terms of moves, but the general idea is maybe tomorrow we get a move like this on the consumer sentiment. I highly doubt it, but keep your eyes out for plays like this coming into the CPI next week. But that is play number 1. Then play number 2. This one's a little interesting, and I'm going to give you a little bit more flexibility, but XRT. This is the S&P retail ETF. It is an index, but why I'm bringing this up, because next week is CPI, and like I'm saying, if these days we have to be kind of patient, especially if we stay range bound, keep in mind what is going to be important next week. So the CPI will be one, but also you're going to hear from some of these retail companies. We got to just hear from Ralph Lauren today or yesterday. That was a big deal there, but in general with the consumer rates, everything, even coming into the holiday season, that is definitely one I would keep my eyes on. So if you have a retail play, maybe post it in the comments, but there is a couple of more earnings as we start to wrap up this earnings. But don't worry, we even got like NVIDIA still too, so still a little bit more excitement, but that is play number 2. And then finally, I gotta go with a post earnings. And wait, did I do play number 2? Is it play number 3? I don't even know. Anyways, but TTD, they reported, and the earnings wasn't that bad, but they got clobbered. But this is just for the movement in the morning. This thing is either going to stay pinned tomorrow, but with what we've seen this week, there's been a lot of either awful earnings recoveries, or they're able to add another 10-15% haircut after doing bad after the cash open, or be on the lookout. It may even have a gap up by pre-market, and then by the bell, it'll retrace to pretty much where it is right now. But definitely a big mover. Going to see where that takes us. Other than that, though, down a punt, and then I closed out of the Netflix. I took a $1,600 profit. We held that one for a while, again, before earnings, and I went down on it. Then we came back up, but I was thinking I sold out at like $439. Again, I was looking for this as the breakout point. It got right there, but I was just thinking here, okay, if I have to wait till next Tuesday to even get this next like $20-30 out of it, it would be a good gain. But I was like, if it comes down before then, I went down on my cart play after being up on a bag. I was like, got to take at least one of them. So I decided to get out, still holding a couple, and then riding through. And then now we see, is this just one day of exhaustion and then we go back to resuming, or do the Bears come out after getting beaten for a nice 9 days in a row, and then we get ready for CPI? But Chad, I hope you're locked and loaded for all of it. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And before opportunity and success comes, first comes the desire. Oh, yes. What do you want, my friend? So think about the desire. Let it come to fruition. Let it plant the seed, baby. Get the long-term, stay hydrated, healthy, all of that. And in the game chat and get ready to close the year. It's already doing it in dramatic fashion, but I love you. See you in the AM and peace out, horn.